Hey everyone. Hopefully you can hear me. Getting set up for a live stream tonight going over an outlook for the 2024 housing market. So give us a few seconds and we get everything set up and ready to go. We are live streaming tonight to YouTube channel as well as our Facebook channel. And we're going to have the recording available for all of you who are joining us after the fact, watching the recording. So just giving it a few minutes to get all set up. For those of you who don't know me, my name is Nick Nowak. I'm a broker associate with eXp Realty in Gloucester County, New Jersey, serving South Jersey and Southeastern Pennsylvania. Throughout the presentation tonight, feel free to hop on any channel you're watching, whether that's YouTube, whether you're watching us on Facebook. Drop any questions. I'm going to address any questions at the end that we do have as we take a look at the year coming up. If you're watching on the live stream recording, feel free to drop me an email or a chat. If you got my phone number, I'll have my email address up and phone number in a second. Feel free to shoot me those questions after the fact. I'll be more than happy to answer them as any questions that you do have. All right, so jumping in, this is as promised our 2024 housing market outlook. We are live streaming, as I mentioned. Thanks to everyone who accommodated their schedules and is able to join us for the live stream tonight. I originally planned to do this last night, but was feeling a bit under the weather and had some concerns if my voice would hold out. So doing much better now, so thanks for your patience and understanding on that. So looking ahead, now I get the question a lot, how's the market? That's the first question I want to answer. But again, for those who don't know me, my name is Nick Nowak. I'm a broker associate working with eXp Realty in South Jersey, Southeastern Pennsylvania. Been about 6 years professionally in real estate. Working with my team, we've helped over 200 households buy, sell, invest in real estate. Presentation tonight is based on accumulating the different economic reports and forecasts that have come out from people who are economists. That is not me. But I do stay up in the market. I do want to understand the trends, how that affects myself, my clients, my area as a whole. So the resources I pulled for tonight's presentation are coming from Zillow.com, Realtor.com. Bright MLS is the second largest multiple listing service in the country. It employs the staff of economics to give forecasts and housing data on the industry, as well as the Mortgage Bankers Association, several other resources out there. So I'm not an economist myself, but I do receive all the information. I do process all the information. You may not have that time to look into the housing market as deeply. So that's why I'm doing the presentation now, to kind of put that together, give you the layman's understanding of what to expect in the next year in the housing market. So that top question I get from people, how is the market? Now, as a real estate agent, you get that from friends, family. That's the Thanksgiving dinner conversation. That's a grocery store conversation I have all the time. Unfortunately, there's no good answer that I can give to anyone to answer that question because you need to define what a good market is. I firmly don't believe there's no such thing as a hot market, a cold market, a slow, a fast market. And a lot of that's because it depends on who you are and how you're asking that question. For example, if you're a homeowner, your definition of a good market is you see your home is appreciating, that you have an affordable monthly payment or your lower monthly payment that you're very happy with. If you're a homeowner in that situation, that's a good market. For a home buyer, when you're asking about a good market, you're looking for the different circumstances that you can buy a home, ideally at a lower cost with lower monthly payments over the term of that loan for the house. You want to have as many housing choices as possible and little competition to get that house. For a home seller, you're looking for multiple buyers who will be competing for your house. You want that, of course, just like a homeowner, a higher appreciation. You want good price and good terms because buyers are competing for your house. If you're a property investor in real estate, purchasing homes to either flip and resell or hold as a rental income property, you're looking to purchase properties, distressed properties usually, as a lower cost, to have them, again, without competition, so you can get good terms as a buyer, and then either hold on for that good rental income or sell for a good profit and have buyers competing at that point for the newly renovated property. There's also, and this presentation is not for this last group, but I want to point them out, the industry investors. This is someone who's looking at the real estate stocks, real estate companies, of mortgages and buying and trading and holding mortgages. A lot of times you see news headlines and they're geared towards industry investors, but you don't necessarily realize that. But those industry investors are looking at the real estate market is moving at a good pace with lots of transactions. That's the main thing they're looking for. So that's why there's no straight answer to how's the market, because it depends who you are. and what you're looking at and what circumstances you're asking, how's the market? It can't be a good market for all these people at the same time. It can't be a bad market for all these people at the same time. And most of the time, no, it's a good and bad market depending who you are. Even as a home buyer, you're not going to find all those ideal criteria. You're not going to get a low cost with no competition and plenty of options out there for low monthly payments. You're not going to receive those all at the good time. So a lot of that's about timing it to determine what's the best time for you to move in a good market. So boiling down a little further, there's 4 things I typically look at. These are the main factors I consider for my audience, my clients, who I look at when they're answering the question, how's the market? We're measured by inventory. That's what's available for sale. How many houses are on the market that you can go out and buy right now? Demand is how many people are looking to buy those same homes. Home prices, which are largely driven by competition, and mortgage rates, which have very much been in the news recently, but obviously highly affecting the cost to buy a home, to refinance a home, whether you want to stay in your home or sell your home. Mortgage rates are coming to play in all those scenarios. So we've all gotten a big lesson, a refresher in supply and demand, I think, the past couple of years, whether you're talking about toilet paper, eggs prices, home prices, but supply and demand very much dictates what prices are for a property, whether or not it's going to be on the shelf when you go to look for it. If eggs are not being produced, the prices go up. They're harder to get your hands on them. And we've all sadly experienced that with different products over the past couple of years. That's always very true in real estate at any time, but supply and demand is a huge factor in determining what that looks like. There's a lot of other factors that go into that how's the market question. And we can go into days of market and a lot of different factors. But those 4, the inventory, demand, the home prices, and mortgage rates, those are the top 4 that are affecting a lot of people who own a home, who want to buy a home or sell a home. So that's what we're going to be focused on as we go through these. Before going too much into 2024 and what to expect, it is relevant to do a little bit of history and talk about where we are right now in the real estate market. First of all, no, inventory is the first point that we wanted to talk about, but number of homes for sale. So up here, I do have a quick chart that shows from 2000 to 2023, so a 23-year history of the number of homes that have been for sale available on the market. You can see over 4 million homes were available. That's at the peak of the real estate industry, 2007, going into 2008. That's when the largest number of homes were available for sale, leading up to, during, and at that crisis. Since then, though, since 2008, we've seen that decline in homes every year. You can see the up and down in the graphs there. This is actually seasonality. More people sell in the spring and summer than they do in the winter. So that causes the seasonality and that up and down in that graph. But you can see that trend line over time is decreasing. Each year, we have less and less homes brought to the market, and that greatly impacts the inventory of the homes on the market. So when someone wants to go out and buy a home, there's been less and less available each year. Leading us to 23, this one ends in September. We're down to just over 1 million homes across the country that were available for sale, hitting some new low numbers. Another way to look at it is these are the volume of transactions, how many homes were actually bought and sold over any given time. And again, you can see there, the spike that comes to mind, 2007, 2009 was a large decrease. We had a housing crash, so there are less homes being bought and sold. And then starting in 2012, that started upticking. People were returning to a normalcy with the housing market, buying and selling homes in transaction, and that steadily increased. I'd go out and say that 2017 to 2019 were 3 very solid normal years. It was a seller's market, meaning there were more buyers out there looking for homes than we had. So homes were not on the market 6 months. They're on average on the market less. But during that time was fairly normal. It was a seller's market, but buying, transacting happened as typical with nothing too crazy going on during that. You can see that spike there in 2020, 2021, the mortgage rates, the pandemic, and lots of effects there caused a spike in the number of homes that we were selling. That's what you might have heard in the headlines, the conversations. No, it's a hot real estate market. What a lot of people were referring to is just the number of transactions that were happening. And then you can see in 2021, 22, 23, that started decreasing to where we are in 23. We actually hit a new low in recent history on the number of homes that are being bought and sold. A lot of that, again, was impacted by mortgage rates and what's available out there. So it's already talked a lot about mortgage rates, and we'll continue to talk about mortgage rates through the rest of the presentation. But this is a quick snapshot of what happened in 2023 in mortgage rates. So this is the 1-year view. Mortgage rates started in the mid sixes, went all the way up. October of 2023, they peaked near 8% for mortgage rates. So that's a lot of the headlines that went out because headlines sell, but mortgage rates went up. There's a lot of impacts based on this rapid increase in the mortgage rate. A lot of people were not expecting it. And it caused a lot of changes in life circumstances and how people looked at real estate transactions, whether they wanted to buy or sell a home. You can see in that latter half after October, mortgage rates have been trending down so far for 2023. We got about 10, 11 days left in the year, so we'll see where they officially end for 2023. But a lot of the experts do believe that mortgage rates have peaked, and we've now started that downward trend. I also want to give a bigger picture. So this is going back to when they first started tracking the mortgage rates in the 1970s. Depending on your age and your demographic, if you talk to your parents, your grandparents about what the mortgage rate was when they purchased their home, they might talk about some of those higher rates, up to 18% for a mortgage rate. So a lot of this is also putting it into perspective. Again, on the far right, you can see the recent years, that spike that we've had over the past couple of years in mortgage rates going up. But also realizing those 2020, 2021 mortgage rates we had were once in a lifetime, maybe once in a couple of lifetimes. But those are groundbreaking rates. Anyone who took advantage and refinanced to them, they're sitting at a 2 or a 3% mortgage rate now, is in a great position. So while we've talked about a huge increase in what the mortgage rate is, that's actually increasing from a very low bottom. So that helps put it in perspective what they are historically across this time period since 1970s. The average mortgage rate is 7.5%. Where we're sitting at today is actually right around that average, but in the low sevens, starting to look towards those high sixes in the mortgage rates. But I always like to zoom out, take a look at this, a couple of decades perspective on mortgage rates. If you compare everything to the 2.65 of 2020, what the mortgage low was, that'll give you a different perspective than zooming out, taking a look at the whole picture. The other factor I mentioned too, how is the market, is the home price. Overall, real estate does appreciate over time. Here we have a quick chart from National Association of Realtors that tracks that from 2000s up to 2023. So again, the 23-year history of home price appreciation. Again, you can see that seasonality, summer and winter in home sales. But you can also see towards that right end of the chart, that started dramatically increasing in 2020, 2021. Again, highly impacted by mortgage rates, the new demand in the pandemic world, people making those moves, looking for their homes. So we saw that, and we saw the rapid appreciation in the median home prices, both here locally in the Mid-Atlantic, New Jersey, Pennsylvania, throughout the U.S. But homes were in short supply. That caused competition for homes, which caused prices to go up overall. Another way of looking at this, so the average historical home price appreciation is somewhere between 3 to 5% per year on average. But this chart, I really like the way this put this together. Again, from National Association of Realtors, but takes a look from 2020 through Q3 of 2023, how much home appreciation. So in that average 3 to 5%, so say 4% over a 3-year period would have been a 12% total appreciation. But instead, since COVID and the pandemic, we've seen that rapid appreciation. During that 3-year period, instead of being at 12 or 14%, New Jersey's at 48.5%, Pennsylvania is at 41.5%, and that trend continues throughout most of the country. Every area of the country had rapid appreciation, some more than others. You also might see from some news reports that talk about nationwide real estate trends. You can see Florida, Texas, some of those ones, the Midwest had even larger than average home price appreciations. So again, something puts it in perspective as we go to look at 2024, but understanding where we've been in the past couple of years. So in summary, looking back at yesterday in the past and where we are today, housing inventory has been low for some amount of time. Since 2012, we've been short on that inventory. There's a whole factor that goes into that if you ever want to talk about that further. But in short, a lot of home builders got burnt in 2008. And the home builders did not necessarily come back. 2012, in retrospect, is the year the home builders should have come back, should have started rebuilding homes. That did not happen. So that's a huge factor in contributing to our shortage of houses. It's crazy. The mortgage rate took some wild swings. That record low 2.65 that we hit in January of 21, just to October of this year, hitting that high of 7.79%. But having that massive swing in just a few year periods certainly played on the real estate market, the information, and how everyone is factoring in the real estate moves. As we talked about, a lot of that demand over 2020, 2021 was driven by the low mortgage rates. I like to say the real estate agents and the mortgage lenders did a good job in telling their family and friends and the public, like, hey, now's a great time to buy. People listened because it truly was a great time to buy with the mortgage rates. So getting out there and locking in those low mortgage rates, as well as the COVID changes. You've probably heard a lot, but the trends moving out of urban areas, moving more rural or suburban. There's been changes to a lot of work life. People now work remotely, and that field is open up, which changes people's housing needs as far as having a home office, as well as flexibility, being able to move further away from cities and major population employment areas. We've also noticed that high buyer demand. Again, everyone was rushing out to buy a home and low inventory. Again, you saw in the appreciation chart that right there. When multiple people are bidding for the same home, you're seeing the prices go up. And we saw that on a couple of the charts I was showing earlier. So now I want to jump into the 2024 outlook, which is a topic that we all came here for. Now that hopefully you have some understanding of where we've been in 2023 and the years prior to that. And again, all the information I have here is compilation of the economists that hire their work full-time, whether it's for a for-profit like Realtor.com or Zillow, or when it's one of the associations like the Home Builders Association, the Mortgage Banker, or National Association of Realtors. Again, so I've tabulated all this information. There is some very varying opinions as they make their projections of what they think the market will do. And also use my expertise, working with local home buyers and home sellers and families to kind of put my light on it, my filter on it, to make it more digestible and see how it impacts everyone in our immediate area. So overall, some factors to expect in housing going into 2024 is we did have large decreases in 22 and 23, about 18 to 20% each year as far as the volume of people moving, the number of houses being sold. So we've had that slower or cooling market over this past couple of years. Again, inflation's gone up, so that affects everyone's personal budgets, as well as those mortgage interest rates we mentioned a couple of times now. But we're going to talk about a little bit. Life still happened for a lot of people, and that created a pent-up demand. The number one reason people make a move, that they choose to buy a house or sell a house, is due to a life change. And those life changes didn't stop happening just because mortgage rates were high. 23 was a pivot year for inflation, the overall economy, the actions taken by the Fed. As of October this year, even in the past couple months or last week, there's still news coming out from the Fed that they've kind of turned a corner, that their policy is changing. Again, I don't get too deep in it. I'm still working on understanding the overall economy and how that affects it. But I very much look at how that boils down to and affects, obviously my personal family, our budget, and then housing as a whole. That's where my interests lie. Something else I always find very interesting is the generational trends in real estate. But millennials are now hitting their peak first-time homebuyer age. The median first-time homebuyer age right now is 36 years old. There's a lot of millennials out there who still desire to own a home, but they're actually a little bit behind prior generations. They're not there yet. Affordability certainly comes into play and several other factors. But I have a great chart I want to share there that talks about that millennial impact on our housing market. So again, I'm going to go through the four factors I talked about before: inventory, demand, home prices, and mortgage rates. So first, looking at inventory. So overall projection for 2024 is an increase in the number of homes for sale, but far below our normal amount. Again, since 2012, our country as a whole has been short on houses, and that amount that we're short has only increased every year since then. COVID kind of threw everything with those numbers and the pandemic and how that worked, even shortened that number even further. But a couple of the sources here, Bright MLS, again, the second largest multiple listing service in the country. They're projecting a 12% increase in sales and volume and houses for sale over the next year. but they're pointing out it's still far below what that would be in a typical year. And again, a typical year, likely referring back to that 17, 18, 19, even those years were low. So we might see an increase in homes for sale, but still less than we have in the past. Realtor.com, they focus a lot in their report on the lock-in effect. So also called golden handcuffs. But lots of people did refinance their mortgage over the past couple of years, refinancing to a 2, 3, or 4% mortgage rate. We actually hit a key factor, I believe it was earlier this year, where the overwhelming majority of homeowners had a mortgage rate on the mortgage that they owned on the house they were paying, their monthly payments, was lower than the market rate. That means if you own a home and you're paying a 3% mortgage and you're going out to purchase a home and you're looking at a 6, 7, 8% mortgage, you have a lot of hesitation to give up that mortgage. You can't take it with you when you sell your house. To take out a new mortgage at that higher rate, it causes a financial impact to you. It decreases the amount of home that you can purchase, even if you're downsizing, or increases your monthly payment in that new home. So that lock-in effect, those golden handcuffs, the past couple of years have held sellers back who might put their homes on the market to move up to a dream home, to move down to a smaller home. Those sellers have not been moving the past couple of years because of these mortgage rates. Realtor overall actually predicts a decrease about 14% in the number of homes for sale. Zillow doesn't give specific numbers in their report, but they are predicting that more homes will hit the market as they're looking from the buyer perspective. That homeowners start to accept the mortgage rates aren't falling anytime soon. Now, one point I want to make here is a lot of these reports were written over the past couple of weeks, the past couple of months. Doesn't necessarily mean that they're up to date on the latest data. I know some of the Fed announcements came out even a week or two ago. So some of these predictions could actually change based on recent data. Because we're now starting to see signs that mortgage rates are falling. So I just wanted to reference that because the Zillow report says a little bit differently. But from the Zillow report too, what they're looking at is home buyers, home owners who are waiting to make their move, waiting for the right time in the market. They're now seeing that mortgage rates are not going to make a drastic change in the near future. So it might be time to go out there and purchase that new home, take out that mortgage regardless. Next factor I wanted to look at was demand in 2024. So that's the number of people who want to go out and who want to buy a home. Overall, expecting to see a slight increase in demand. And a lot of this is based on mortgage rates as they ease affordability for the new buyers. And then we talked about those golden handcuffs for the sellers, freeing them up that they're willing to leave the current mortgage rates that they're holding, that they're paying now, and share that and go take out the new mortgage at the new higher rate. Bright MLS, again, the multiple listing service, they point out, no, there's not one mortgage rate set for the year, but they expect to see a downward trend as most of them do with mortgage rates. So they expect for a slower start to the spring, but then the year to pick up as far as demand, competition, as buyers come out looking for that new rate. That does pertain to anyone looking to buy a house in 2024. I do have some advice for you at the end, how to look at that trend of rates going down over the course of the year. Other economists are looking at the affordability aspect. Zillow pointed out home buying costs will level off with that decrease in mortgage rates. Buyers who may not have been able to afford homes in the past couple of years might now have a little bit more flexibility with that mortgage rate that they can take a look at there. And again, National Association of Realtors, again, talking about the mortgage rate and how that impacts demand. But buyers coming back because the low rate and sellers giving up on that lower interest rate because of life events. This is, I mentioned earlier, the generational impact on real estate. I've always loved looking at generational trends in anything, and then especially how they impact the real estate and the housing market. So this is the U.S. population separated out by the different generations. You'll see the millennial generation in blue is a very large percentage of our U.S. population right now. That red line is the median first-time homebuyer age. Right now, it's about 35, 36 years old is when the median person is buying their first home. But you'll notice on that, no, we're not halfway through millennials as far as hitting that age. There is still over half the generation that has not hit that median first-time homebuyer age. And it's actually a larger segment of the generation that has not hit that first-time homebuyer age. So when we talk about pent-up demand and buyers ready to go who haven't been able to afford a home, haven't been able to make that move, a lot of that's impacted by that millennial generation right now. The largest segment, 30 years old, looking to buy their first home. A lot of the second question I get when people ask, how's the market, is they start talking about the market crash. Hey, when's it going to crash? This chart right here is kind of my firm belief that we're not going to see a market crash anytime soon. Talking to millennials, again, that's my generation, my age group, my peers who haven't bought their first home. Most of them are ready, willing to buy their first home. So anytime that we see a decrease in mortgage rates, so we start talking about a decrease in home prices, that segment right there, the younger millennials, they're stepping up. No, they're going to jump in, see the opportunity to buy their first homes. Again, supply and demand. Once there's an influx of buyers coming in, then prices come back up or hold steady. And we fail to see that crash that anyone might be trying to predict out there. So I know there's always lots of people predicting the real estate crash out there. There's one huge real estate investor came out in the last week saying he's predicting a very large crash. I disagree, and a lot of it is based on this millennial trend. We're still short on homes, basic supply and demand, especially looking at that millennial population. There's still a lot of people out there who want that home that once it becomes attainable, they're going to jump on that. I found it very interesting. The National Association of Realtors has put a lot of focus on the pent-up demand. So talking over the past 2 years, whether this is first-time home buyers or current homeowners who want to sell their home and buy a new one, saw the mortgage rates, ran the numbers with the mortgage lender, said, all right, maybe now's not the time. So we know there's a lot of people that have held off on making a move the past couple of years just because of those financial or mortgage factors. They didn't feel like it was the right time looking at the numbers. I love this slide for the NAR that talks about what happened over that 2-year period. These are all reasons that people make a move, that they sell a property, that they buy a property. But we've had 7 million newborn babies, 3 million marriages, 1.5 million divorces, 7 million of our U.S. citizens turned 65 years old, 4 million deaths, increase in new jobs, and 50 million job switches. All these are reasons, and the primary reasons why people buy and sell houses. All this happened over the past 2 years. People don't wait for these life events to happen based on mortgage rates, based on housing inventory. I don't know too many people that know when they're getting engaged, they say, oh, it's not a good time. Mortgage rates are too high to get married right now. Same thing with passing away or turning 65 or retiring or taking a new job. All this life still happens, and life is the primary driver of the housing market and real estate. So there's a large number of people out there who wanted to make a move in real estate for these reasons right here, but may have held off in the last 2 years. So it brings us to a third point, looking at how's the market in 2024. Mortgage rate projections. So these are always very difficult. There's a lot of factors that go into mortgage rates. I'll be honest, a lot of it's above my head, but there's a lot that goes into it with inflation, the Fed and their interest rate policy, obviously Wall Street, the bankings, the stocks, everything that goes into our economy as a whole. And that predicts what our mortgage rates, or that sets what our current mortgage rates are. So here, pulling some of the top sources, again, Bright Multiple Listing Service, Realtor.com, National Association of Realtors, Mortgage Banker Association, and Fannie Mae. There are mortgage rate predictions for the next year by quarter. I do find it interesting, as I pointed out before. So some of these projections, most of them, came out well before recent events in the past couple of weeks. So mortgage rates are already hitting that low 7%, even hitting under 7% in some cases. So you can see in first quarter, some of them were projecting 7 or higher mortgage rates. No, if we continue a downward trend, those projections we know for quarter one are already a little high. So we can only see where mortgage rates end up. Obviously, projections were off that these same entities made at the end of 2022 for the 2023. But these are projections where they are. Everyone's consistent across the board, talking about a declining mortgage rate over time. So starting the year around 7% and ending in the mid-6s right at that mortgage rate. And again, if you haven't picked up on the other elements we've talked about throughout the presentation, mortgage rates have a huge impact on that demand and supply and inventory and all other aspects of the housing market. So that's a consensus. Mortgage rates will continue to decline throughout 2024. As they go down, inventory and demand will increase. Once there's a lower rate, it frees up those sellers with a current mortgage. Buyers who are ready to hop in the market see their opportunity. Once there's more people entering in the market, then there's certainly increased demand, and that would cause additional price appreciation. Now, a lot of it in projecting mortgage rates and their impacts on the as a whole onto the housing market is a lot like when that snowstorm comes in. Weathermen don't have complete accuracy, but they can tell you, hey, the storm's coming in. They can give you an idea of how much rain or how much snow is going to fall, but they always don't know that full impact. I very much see mortgage rates the same, where it's a projection. Hey, we know change is coming, but they can't exactly measure how much change or what that snowball of those changes will be. Excuse me. Going to the fourth aspect for 2024, home prices. Home prices overall, from the expert opinions, will have a moderate increase in 2024. In fact, most of them pointed out almost an insignificant, and they even said home prices holding steady. So coming from Zillow, they mentioned holding steady in 2024, even falling 0.2%. And again, they reference, once again, mortgage rates have a huge impact on real estate, on that demand, and on those home prices. Bright MLS points there. Now, more inventory coming to the market brings out more buyers. That keeps home prices stable, and they projected a 1.5 increase. At the bottom, you can see those additional increase projections. Fannie Mae 2.8%, Mortgage Banker Association at 1.1%, and NAR at 0.7% projection on the home price increase. Something that's very important I really wanted to dive into and point out too. In the midst of COVID in 2020, 2021, the housing market was really hot. Everyone's looking to move, got very competitive in the market. We saw a lot of the same thing happening throughout the country. We're very, very short on houses. Buyers were out there, 20 plus offers going in on any house that came up for sale. We didn't see too many differences regionally or in local markets. You did hear some exceptions, most notably Florida, California, Texas. Some of them were a little bit hotter than others. Things were moving more rapidly, more competitive. Since then, in the last couple of years, we've gotten back to that regional. Real estate is all about location. So now we're seeing regional changes in the housing market. What's happening across the country is not necessarily what's happening in your market, which is very important to point out, because I wanted to show a couple key things for the Philadelphia metro market. I'm not just talking about the city of Philadelphia, but the greater Philadelphia area. So that's South Jersey, Delaware, and southeastern Pennsylvania. Those markets together, all lumped together for analysis purposes. So, for example, Bright Multiple Listing Service, that they directly serve this area. In their nationwide report, they expect a 1.5 increase in housing prices. But specifically in the greater Philadelphia, they actually double that, on 3.2% increase in the home prices. Similar change in inventory. They expect inventory houses available on the market to increase by 7% across the country, and over 10% specifically in the greater Philadelphia area. And it's not just the multiple listing service that pointed that out. This is from the National Association of Realtors. They pointed out different metros that they expect more movement in 2024 because of that pent-up demand. Again, I mentioned before, the National Association of Realtors report really focused on the pent-up demand, the births, the deaths, the marriages that's happened over the past 2 years that people haven't been able to move when they wanted to. And they actually highlighted the media market, Philadelphia, Camden, Wilmington, that greater Philadelphia area, is one of the top pent-up demand markets. It actually led to Philadelphia Inquirer. This was yesterday's paper. Philly's named one of the top 10 housing markets to watch in 2024. So on the slide there from the article, they did the analysis on there, trying to predict what those top 10 markets were. Philadelphia came up top for a number of reasons, into the top for a number of reasons. But they're looking at the number of buyers that be able to go from renters to homeowners if the mortgage rates hit certain conditions. They're looking at the average time that people have owned their homes in the Philadelphia region. That's been longer than the national average. So they're seeing that as the pent-up demand that sellers will likely make a move because they've stayed in their homes longer than they have in other places in the country. Similarly, if you look at a lot of these reports, they are predicting some markets that are not going to do as well as far as price appreciation. And interestingly enough, no, those markets that were the hottest, no, you heard the most about in the midst of the 2020-21 buying frenzy, but Florida, Texas, California, they're projecting those will have the biggest price decreases. They're going to have larger increases of homes on the market, less demand. More or less during that peak, they had a higher peak than everyone else. They're now seeing the effects from that. Our region, which very much saw same situations across the country during that 2020-2021 period, but they're now looking at the greater Philadelphia, South Jersey, and saying that's one of the top markets to watch in 2024 because of the amount of pent-up demand. We have a lot of buyers ready to buy and a lot of sellers who are ready to make their move. So every report that goes out there, almost all of them put in that there's certainly wild cards in play. There are always things when you're making projections. Nobody has that perfect crystal ball, but things that could come up that change these projections, that change the landscape. Obviously, at the 2019 December when we were making 2020 predictions, no one expected a global pandemic. But some things that they do know are wild cards that will cause changes to these projections. Obviously, our political landscape. We're coming up on a presidential election year. That's going to be very much in the news headlines. That's going to be lots of debates, many different ways going into that. Geopolitical events. What's happening in Eastern Europe, what's happening in the Middle East, certainly has an impact on our economy as a whole, and in turn on our housing market. Inflation, the interest rate policy of the Fed has been a huge topic that directly impacts mortgage interest rates, which we already talked about many times over, impacts our housing policy and information and changes as a whole. And anything with banks, with Wall Street and the stock market, all those have impacts. You can never accurately project that. And those all have an impact on the real estate market as a whole as well. I also want to talk about what's most important in that 2024 outlook, and not to be corny or cheesy, but that's you. Working with clients, working with people who want to buy a home, want to sell a home, you can't perfectly time the real estate market. But most people are looking to make a move because they have that massive life change, whether that's getting married, forming a new household, new baby, an unfortunate death in the family, a job change. All those play a much larger role in your budget, in your family, in your life impact than the mortgage rates, than the supply, than the demand, the multiple offers on properties. So as much as you can look at the outlook of what the market's going to look like, a lot of times looking at your personal budget, your personal household or family information is going to have the biggest impact on you in 2024. Now, for example, if you got a new job, you have that increased salary, you can now make that move you want to. That increased salary is going to have more of an impact than a mortgage interest rate, supply demand. Same thing with a new or growing family. If you have that need, that you need a bigger home, you can improve your life on that daily basis by making that move. That mortgage interest rate, those other factors are not necessarily going to impact you in the same way. If you've been saving up, that down payment and closing costs to buy your first home, and 2024 is the year that you hit that, best thing to do, and I'll talk about that next, when to buy real estate. But once you hit that benchmark that you're financially, emotionally, mentally ready to purchase your first home, that's the best time to do it, not necessarily based on time in that market. Or I'll keep on your current situation. If you're a home that's too large for you now, maybe you're an empty nester, maybe it's physical upkeep with the property. Don't stay in the larger home and try to struggle with that upkeep, that maintenance, keep up with that tax bill if that's not where you're supposed to be in this point in your life. Again, dealing with that situation, something that's affecting you on a daily basis, is more important than the overall market trends. Remember that real estate has a track record of overall appreciation over time. Real estate continues to appreciate. No, they're not making more land. They're not making more real estate. So that does have that track record appreciation. I love the quote. I couldn't track down the exact source, and there's about 1 million different variations. But it's been said the best time to buy real estate is yesterday or 5 years ago. The next best time to buy real estate is today or tomorrow. So I want to show that. These are a couple quick projections of 5 years out. So giving a little bit of bonus here, what the real estate market looked like. So put on the source for this is Keeping Current Matters, which actually tabulates financial and real estate reports from a number of different sources. But they're projecting the potential growth over the next 5 years in household wealth. If you own a home, is 71,000. The home price performance, they're looking at that increase over the next 5 years, how much your home will appreciate. Again, projections, the further you go out with the projection, the harder it is. But they're still predicting that houses are going to continue to appreciate. So if you're on the fence whether or not 2024 is the right time to buy a home, the right time to sell a home, this is important to keep in mind. Now, if you're paying rent, you are paying 100% interest. I've talked to lots of renters who don't want to jump into the market because that mortgage interest rate's too high, without that realization that that monthly payment they're making every month is 100% interest payment. So don't sweat over the 5, 6, 7s, whatever that market mortgage rate must be. So that's something I like to share, keep it in perspective with real estate as a great investment. So I want to talk real quick to the buyers. People are considering a purchase in 2024, whether it's your first home, whether it's a move-up home, or a job relocation. So keep in mind, mortgage rates came off the recent peak in October 23. Every expert's projecting that they're going to continue a downward trend throughout 2024. Some of the reports actually cited there talked about, I think it was Bright MLS, but a slower start to the spring market, because buyers might be waiting for, well, I'm going to wait till later in the year, maybe fall of 24, if rates are going to continue to decline. But as rates decrease, competition in the market will definitely increase. I don't know if we're going to hit that crazy multiple offer scenario as we had in the past couple of years, but we're still seeing multiple offers in the market now. We do still have competition in the market. I'd expect more competition in 2024 as the year progresses and goes on. So something to keep in mind. So just waiting for that rate to come down. One, there's no guarantee it'll continue to come down. But two, the sooner you go in the market, the less competition you will have. If they do decrease, more buyers will come out. And now you're shoulder to shoulder with more buyers at the showings and the open houses, and then ultimately putting your offers into the sellers. Also, I find it's important to point out to buyers, particularly first-time home buyers, but that mortgage rate that you use when you purchase a home with a 30-year mortgage, you're very unlikely to keep that mortgage rate. I think a lot of people forget that scenario as well. Actually, statistically, you're very unlikely to keep that mortgage as a whole. But if you find the right home for you and it's the right time, the finances work and the prices is right, go ahead and make that purchase, the mortgage rate. You can always refinance, change that mortgage rate. Now, if that scenario changes, if mortgage rates continue to decrease over 2024 into 2025, improve that situation, because you still have that home that you're looking for that's perfect for your needs and your family needs. And then they are still projecting steady or slight home appreciation. So it still holds true as it has for the past several years. The home that you saw yesterday that sold for $200,000 will not be selling for $200,000 tomorrow or next month or next year. Homes that you see available now on the marketplace will continue to increase over time. So a house in one neighborhood, when that one sells, the next one will probably come to the market for a higher price. So if you don't own a home, it's much better being the other side of the fence. Be the homeowner to enjoy those equity gains rather than sitting on the sidelines and watch the prices go up if you're not in a home yourself. Speaking to potential home sellers for 2024, it's important to keep in mind, though, inventory still remains low overall. There's going to be no massive correction to that. We're not going to have houses pop up overnight. So it still remains a seller's market in our area throughout the country. That's not expected to change in any major way, shape, or form. So if you own a home that you're looking to sell, you still have that upper hand there. A lot of home sellers now are looking to sell their home and purchase a new one. Again, so moving up to the dream home, downsizing to a smaller, more manageable home. The biggest struggle in that scenario is timing those two sales together. Like I mentioned before, there's still competition in the market. We still are seeing a lot of multiple offers. So it can be difficult that if you're making an offer to purchase a house that's contingent on the sale of your old house. That can still be very unappealing to sellers who have other choices in the current market. One of the things I would suggest is explore one of the more innovative programs out there. There's a great product called Buy Now, Sell Later. So mortgage company works with you to purchase that new home without the contingency. You can move into the new one and then go back and sell your old one. Very much simplifies that transition. I'd also advise get your home equity report. It's available on my website, nicknowakteam.com/home value. Be happy to keep in touch with you over just the value of your home, how much equity you have. That automated monthly or quarterly update comes to your email inbox and tells you your options, how much you paid on your current mortgage in principal and interest, and how much equity you have available, and how you can use that towards the purchase of your new home or other life events that might be going on. So in general for everyone, so as I said in the beginning, remember there is no definition of a good market. It always depends on who you're asking, what perspective you're coming from, and what you're looking at. So again, even just from that buyer perspective, a good market for mortgage interest rates doesn't necessarily mean a good market on home prices. You'll never find that golden scenario as a buyer or a seller. So definitely keep that in mind, especially as you read news headlines. I know these really get to me, but news headlines always reflect like national trends or whatever's the hot thing going on. So they'll talk about Florida home prices a few years ago were skyrocketing. They might be talking about 2024 about Florida home prices, crashing down. I just saw something today about California. Sales are drastically slowing. So whether talking national or other regions of the country, that may not reflect and probably doesn't reflect what's happening here in our market, in our backyards. I said it before, reading a national news headline about the real estate market is like listening to a national weather forecast. It's not necessarily inaccurate, but it may not at all be relevant to you and what you're doing for your day. News headlines also try to oversimplify the market. They use those words that I try to stay away from, even though I've said them multiple times in this presentation. But overall, summarizing the entire real estate market as hot, cold, good, bad is not necessarily accurate because it can't be summarized in that one way. And they also may be catering to those industry investors, one of the groups I talked about in the beginning, who are talking about the overall valuation of real estate companies or valuation of mortgage bonds. Not someone like yourself or me, who's a home buyer, home seller, home owner. So they might be talking about that volume of the real estate, projections within that aspect of real estate, which is not quite the same of what you're looking at if you're looking to purchase or own a home. So I do have a number of sources. I'm going to put this presentation, it's going to stay recorded up live on YouTube and Facebook. These are a number of sources I have. I'll also put them up on my website, nicknowakteam.com/2024 Outlook. If you ever have any questions on this, where the information came from, I'd be more than happy to share that. If you do have any questions on anything I covered, you're welcome to drop them in the chat or share them with me as well. Let me pull up my information again. So my, excuse me, my phone number, cell phone is right up there, as well as my email address. If you have any questions on anything in the presentation, know what to expect in the 2024 housing market, or any questions about your specific situation. Again, key thing is your household, your family is going to be most important. That's going to carry the biggest impact into housing next year and into the future, more so than any of the mortgage rates, home prices, supply and demand aspects. So I hope you found this helpful. Again, I'm always happy to answer any questions somebody has on the housing market, to go into any questions they have on your specific situation, on the housing market as a whole. Feel free to reach out. Thanks so much for tuning in. Hope everyone has a great night.